Hello everyone, welcome back to Upside Down Data. Today I want to talk about a new risk indicator we just launched for Helium and its native token HNT. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter where we put out regular updates about our risk indicators and more. So if you're returning to the channel, you're quite familiar with this type of graph. What I'm showing you here is the price history of Helium over time. The price is in logarithmic form. Each day, or each dot corresponds to a day, and each day is color-coded based on the output of our risk indicator, the upside-downside potential indicator, or UDPI. A score of 5 means high risk. That's when the upside potential is low, downside potential is high. Score of -5 is low risk. That's when the downside potential is low, upside potential is high. And what you can see is that if we just look at how the UDPI reads the price history of HNT, it does a pretty great job of identifying these low risk periods where purchasing HNT had historically been advantageous. One would have done quite well to have bought HNT in these low risk zones, as well as these high risk zones, these tops or local tops that tend to precede corrections or at least sideways action. So something I think is kind of interesting about the HNT chart is that you can kind of see that it's a lot more up than down, right? It's actually kind of remarkable for an altcoin how limited the corrections are. Now, granted, it did still have a notable correction from its high that it put in April of 2021 into the bottom of the summer correction. This is about a 50% correction. But if you compare this to other altcoins, like AVAX, for example, had an 80% drawdown from its high in the spring into the summer. And so really HNT has held up pretty well throughout that correction, kind of remarkably well for an altcoin. And then now we're back off to the races. So, even if someone had bought at this high risk period back in April, one only needed to wait about 6 months before getting bailed out by HNT. And then if one had held even longer, one would now be up in a pretty hefty profit zone, over 2x profit up from this entry point back here. And so I think that's interesting about HNT. And one of the things that might possibly underlie this a little bit is that HNT kind of differentiates itself from other altcoins in that there's a very kind of concrete, real world use case for this token. So Helium, if you're not familiar, is a decentralized wireless network. Basically, is what the token powers. So basically, the way it works is that individuals will buy these miners, which are basically just nodes that allow people to connect their smart devices to those nodes, basically over internet. You can do things like use it for cell service, but then also just kind of internet service. It's basically like having a decentralized version of Verizon or AT&T or one of those cellular networks. And so to use the network, if you want to use Helium, you need to have HNT tokens, and then you need to burn them to basically create the actual token that you interact with the network for. So there's this constant demand for HNT on the network. And so maybe that's part of the reason why the correction was a little bit more muted for HNT than it was for some of the other altcoins, where if people were actually using this network, then, whether or not there's a crypto correction or not, doesn't necessarily change the likelihood of people using the network. If you've already been using the network, why would you stop using it just because crypto's in a correction? In fact, it would just be cheaper to use the network then potentially because buying HNT would be cheaper. And so that might provide a bit more of a floor for the price rather than some of the other altcoins, which didn't necessarily have that floor built in that could kind of free fall a lot further. So that's obviously just speculation. Who knows exactly why HNT has held up so well and done so well? But that could be one reason. The other thing that's obviously probably going on here as well is just speculation, that people see an asset or a project like Helium, they like the sound of it, they think the use case sounds good, it makes sense to them, so they're just speculating that it will do well and then putting in a lot of money there as well. So that could have also been just a lot of people willing to buy the dip because they believe in the project. So never really know. It's hard to know if the current valuation of Helium is legitimate for its fundamental value or if it's just being propped up by a lot of speculation. But regardless, if you just look at this chart, it's been a pretty darn good. It's been performing quite well. It's been a pretty darn spectacular asset, really, in its price history. And the fact that it hasn't had super major corrections might mean that it's not a bad one from a kind of more general risk perspective in terms of the downside that could be expected. Now, of course, within that, there's going to be high and low risk periods of HNT within kind of its price history, and the UDPI does a good idea of identifying those as well. And so if we look at where we are currently, kind of, we came out of the summer and we just had this kind of big explosion to the upside off of this actually pretty low risk period that the UDPI identified. We shot up over 2x move, from these lows down here up to here. And now what the UDPI is suggesting is that HNT might need some time to cool off, that it's quite high up there in its risk. I think we can see this a little more clearly if I just show you the raw output of the UDPI over time. So, this is just the UDPI on the y-axis, so high risk 5, negative 5, low risk. And so this was the spring, got up over 4, about 4.5, a little bit above. But then actually now more recently, we actually went up and touched 5, the highest risk that we've seen with HNT so far from the model's perspective. And we're currently kind of cooling off of that. And if history is any guide, what we might kind of expect is that at best, we might just get some kind of sideways action coming off of this. The model would be thinking that right now it's probably unlikely for HNT to just go parabolic again a second time, that the model would kind of be expecting this more kind of sideways action until HNT has maybe been able to build up some support, kind of cool off, maybe even have to correct a little bit more before it's able to do that, to put its next leg up into the upside. And so really, if you're looking at this, what this is saying is that right now the downside potential is far outweighing the upside potential. It's not totally ruling out that HNT could go higher. Obviously with there's still room to move up. And of course, the model is basing its estimates based on what it's seen in the past from HNT and what it's kind of currently seeing. That's not to say there couldn't be some fundamental development that totally changes the ballgame, totally changes the landscape, that just shoves HNT way into the stratosphere. You never, with crypto, you never really know. With these models, they're basically, it's giving you its idea, its estimates of what it thinks is realistic, but obviously there can be crazy things that could happen. So you always have to keep that in mind to some degree. But my personal interpretation of this is that I am very cautious about HNT right now. I personally would not see this as a good entry point. I think that the best we can expect is just kind of sideways movement, maybe slight movement to the upside, but nothing really to write home about. There are probably other crypto assets that are offering better upside potential right now. Now, that's not financial advice. You should form your own opinion about what might be the best way of interpreting this or how to approach HNT right now. But that's just my interpretation of what the model's saying. And I think it's personally think it's quite likely we're not going to see HNT put in a lot of work to the upside for a little while. It'll probably take at least a month, I'd guess, if not more, for HNT to kind of cool off. And it'll probably either be that sideways action, as I was mentioning, or potentially even correct down a little bit more before it's ready to put in its next big move to the upside. So we'll have to watch it. We'll have to see what happens. Obviously anything can happen in crypto. The model could be surprised. I could be surprised. But if history is any indication with the way that the model has been able to call moves by HNT, this kind of action, this kind of level of the UDPI is a cause for concern historically, that it hasn't, usually when it gets up to these high levels of risk, it has not been able to go much further. But again, we'll just have to watch it and see what happens. So to put a more fine point on it, this is what the current exact level of the UDPI is reading. So from -5 to 5, it's at a 4.21, so quite high risk right now. So really this is saying that the downside potential is way higher than the upside potential. And so the risk-reward ratio is just really not in one's favor right now to be investing. Now again, not financial advice, you should form your own opinions, but that's what the model is suggesting. It's really expecting a correction or just sideways action from here. It's not expecting a huge jump to the upside. And if we compare this to the rest of the crypto space, we can really see that HNT stands out as being especially high risk. It and AVAX are kind of the highest risk assets that we're watching currently, and the rest sit quite a bit lower. And there are plenty of plays right now that sit in the negatives. With this correction that Bitcoin had and the rest of the crypto market had in the last couple of weeks, risk has really fallen across the board. And so a lot of these assets have now fallen quite far in their risk level. Some that had actually been a little bit potentially in the more overheated zone, like Phantom, has actually fallen quite nicely into the negatives here. Same with, HBAR has been falling for a while. We've been following that one. Harmony has fallen. Matic has fallen. A bunch of these different assets. Link has fallen pretty far as well. It had been up at around 2. Now it's down at 0. And so really the idea is that the UDPI models are suggesting there might be other assets that are offering more favorable risk-reward ratios right now than HNT. Now again, not financial advice, but that's just what the model thinks. And so what I'm personally expecting is that some of these lower risk assets might find their next impulse, might find their next move to the upside. And what might end up happening then is they'll pump up to higher levels of risk. And then maybe assets that are currently high risk like HNT will have time to cool off to lower levels. Assuming that this bull market is going to last for a while, which I personally think it will. I think we're going to that I personally think this bull market is probably going to extend well into next year, and it's not going to be this kind of immediate bull off top like everyone's expecting. I think it's going to be kind of a slow move to the upside with higher highs, higher lows, but nothing super insane. It's going to kind of methodically move its way up there. And if that happens, if we have all that time, what's probably going to happen is a lot of these different opportunities are going to present themselves, where you'll have an asset like HNT that if you were in it before it put in that 2x move, then it's a great opportunity potentially to take profits off of it, move it into one of these lower risk assets, ride its move up, and then maybe shift back if HNT is lower risk in the future. Now again, you should form your own strategies, but that's just one of the things that we talk about a lot here on the channel, of the utility of having multiple indicators like this, that when you have a position in an asset like HNT that seems unlikely to be able to put in a whole lot more work to the upside in the near future, then maybe that money is better put somewhere else that has more upside potential currently. So again, not financial advice, but just something that we like to think about here at the channel. So if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the UDPI, we're all going to make it.